Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We have a couple of more aggressive growth stocks to talk about now with Bill Wilton, our aggressive growth stock analyst here at Zacks.com. And one of the ones that you brought with you today is Omnova Solutions. I guess it's pronounced OMN, the ticker symbol. What kind of solutions do they provide?
What they do is they make different types of services and chemicals for both decorative and functional purposes. Things like upholstery, laminates, wall coverings, you know, anything from commercial, residential to industrial applications. So interior design solutions.
Well,
actually, a lot of it's industrial functional solutions. So you know, things that'll prevent corrosiveness and things like that. So just about anything. If it needs covering, they'll do it.
I got it.
They just reported quarterly results on June 23rd. They beat estimates. The Zacks consensus estimate was 8 cents. They came in at 12 cents. So quite a sizable surprise. The nice thing was their net income was about $5.1 million, which is actually up from a $3 million loss in the same period last year. Full year estimates are up. As a result, analysts polled by Zacks are now averaging a 34-cent estimate. Before the earnings announcement, it was at 27 cents. One of the other great things about this company is they've got a return on equity just over 24%, which is about 3 times most of the other companies in that industry.
Interesting.
Currently, they're still maintaining their Zacks #1 rank. We also have a buy rating on them. Most of the brokers that are following the company also have a buy or a strong buy on the company as well. Another good thing about them is they've got tremendous momentum right now. They've roughly doubled over the past month. And, you know, they continue to surge, and right now it doesn't look like anything can slow them down.
That's what we like to see.
Yep.
Then there's Baidu. Is that how it's pronounced?
Baidu.
BIDU, the ticker symbol.
Correct.
They offer search engine and internet service.
And they're based out of China. Essentially, the easiest way to think about them is they're China's version of our Google. They do web-based searches, advertising, image searches, video searches, things like that. They also do direct-to-customer marketing. So they do the advertising revenue is how they generate their stream of income, very similar to Google.
And do they command a similar share of their market as Google does here?
Yeah, they are the dominant search engine in China. So they've been the story out of China for the last couple of years. They just reported their first quarter earnings on July 23rd. Revenues were up 37%, and net income up 45%. So they are just growing hand over fist right now. The EPS came in at $1.61, which beat the Zacks consensus by about 15 cents. Currently, the Zacks analysts are providing estimates for Baidu. They're looking at about 34% growth this year and another 41% next year. For a company that's growing like this, that just speaks volumes. They just still have so much more room to grow.
Yeah, the proverbial leaps and bounds.
Exactly. One of the things that is a bit of a concern for them is their valuations. Right now, they're trading at over 50 times earnings. But one of the things that you know that we've seen is that these estimates continue to skyrocket. So as these earnings estimates go up, those PE valuations will come back into line. But you know, as long as they're raising estimates, people are still shuffling into the stock. So whether or not the estimates come into line remains to be seen, but the stock continues to climb, which is fantastic. Here's a chart that I've put together. It shows a few periods of brief consolidation. You know, anytime a stock is on a tear like this, it needs to take a breather. As you can see, I've highlighted 3 periods where it's done just that. It'll have a brief move up, shuffle sideways for a little bit as the buyers and sellers consolidate before it moves up again. Right now, it looks like we're entering into another one of those consolidation periods, which could be followed by another upward movement.
How long do those last typically?
You know, there's really no typical time frame. Sometimes it's months, sometimes it's weeks. So it just depends on a lot of different scenarios.
All right, do you own either of these two?
I do not.
If you want to check out some more aggressive growth stocks that Bill has his eyes on, go to Zacks.com's homepage. In the upper right-hand corner of that homepage is where we update daily the Zacks Rank Buy stock picks. And in Bill's category, aggressive growth, you just click on that headline that's right next to that listing. It'll take you to the current company that he's following and then an archive of some others he's written about in the recent past. With Bill Wilton, I'm Terry Ruffalo.